All right, let's get into it. Today we're going to break down this huge but kind of quiet shift that's happening in the digital asset market right now. It's really a story of two totally different worlds colliding, and our job here is to make sense of it all.
And that quote just hits the nail on the head, doesn't it? Because that's exactly what's going on. While one story is getting all the headlines, all the attention, the real story, the one our source material is locked in on, is being written in the background.
And this slide right here really just lays out the two sides of the coin. On one hand, you've got the noise. This is the stuff you can't escape, the meme coin circus. I mean, our source points out there's something like 17 pages of streamers on sites like Pump Fund. It's a constant churn, right? It's all designed to grab your attention. It's fast, chaotic, and it is loud. But then, on the other side, there's the quiet shift. This is where billions, with a B, from institutions are pouring in. And they're not here for a quick flip. They're here to build real, foundational substance.
So first up, let's unpack this institutional wave. Why is it happening now of all times? And who are these quiet players making all the moves? Because, this isn't random. There are some really clear forces driving this whole thing.
The first piece of this puzzle is just classic economics. The Fed has started cutting rates. And what that means is that yields everywhere else are kind of drying up. So for big money, that's a huge signal to start looking for momentum, to move into what they call a risk-on environment. And oh boy, have they found that momentum.
And that momentum is, well, you can't deny it. Big money is looking for a place to go, and Bitcoin is practically screaming, "Over here!" It's just blasting past its old highs, smashing through the $116,000 mark. I mean, this is the kind of move that institutions just can't ignore.
But it's not just the price going up. Just look at the sheer scale of the money coming in. We are not talking about retail hype here. The source material highlights institutions scooping up $3.4 billion worth of Bitcoin in a single day. That is an absolutely massive, definitive wave of confidence.
Okay, so here's the thing. This institutional wave, they're not just buying assets and, crossing their fingers. They are actively funding and building the actual infrastructure, the rails, if you will, for the future of this market. The whole foundation is getting stronger, literally brick by brick.
Our source material points to 4 key pillars that are being built as we speak. First, you've got these regulatory green lights, right? Stuff like the SEC approvals for ETFs, and those are acting like a giant magnet for capital. Second, the market itself is just growing up with real financial tools like futures and options. Third, institutional-grade security is expanding to meet demand. And fourth, and this one's huge, seamless cross-chain connectivity is finally making the entire ecosystem talk to each other.
And look, these new rails, they're not just sitting there waiting for something to happen. They are already being used, and used heavily. We're seeing over $1 billion in daily volume flowing through these cross-chain bridges alone. This isn't some bet on the future. It's real, tangible utility happening right this second.
So what happens once this foundation is in place? Well, you can start building real applications on top of it. Applications that generate actual, measurable revenue. And this is really where the substance separates itself from all the hype.
And this is where learning to tell the difference between real value and just noise becomes absolutely crucial. So, for example, take a look at this comparison. A platform like Hyperliquid is bringing in over $3 million in revenue every single day. That's a clear, hard number. Now, compare that to the meme coin flood, where the key indicator isn't revenue, it's just splintered attention and social media noise. You see, one is a business, the other is a spectacle.
And this substance, this real utility, is popping up everywhere. And this is the part I find fascinating. You have traditional finance giants like Franklin Templeton putting real-world assets on-chain. You've got Google partnering with the Ethereum Foundation for the AI agent economy. Institutions are getting seriously into ETH staking ahead of its next big upgrade. Prediction markets are literally going mainstream on TV networks. Everywhere you look, real-world adoption is actually happening.
So what does this all mean for someone just trying to make sense of this market today? I mean, how do you navigate this circus to find what actually matters? Well, it really comes down to one thing.
It means learning to find the signal. And the signal, as our source material defines it, is this fundamental shift away from quantity and towards quality. It's all about focusing your attention on the projects that have real revenue, that have institutional backing, that have tangible use cases, and learning to tune out all that other speculative noise. Ultimately, the key takeaway from our source is simple, but it's really powerful. Watch what the serious players do, not what the crowd says.
Follow the institutional money, follow the infrastructure development, and follow the revenue. Trust me, their action speaks so much louder than any headline.
So, as this quiet shift from hype to substance keeps building momentum, the real question our source leaves us with is this: where will you be looking? Are you going to be watching the noise of the circus, or are you going to be watching the quiet construction of the future? Thanks for joining us for this explainer.